live tracker from all-time high levels. Raunak Onkar is with us, Head of Research and Fund Manager at PPFAS Mutual Fund. PPFAS, of course, had their Unit Holders Day on the 22nd. Raunak, good afternoon. Good to have you with us here. I want to start with, of course, the big one, which is you're launching a new fund, large cap fund, right?
Yes.
So talk to us a little bit about the reasoning behind it, because you're sitting on a lot of cash and you already have a fund which you can sort of, you can deploy in that fund. So what's the need for a new one?
Prashant, thank you for inviting me. So definitely, if you have seen the video on Saturday of our AGM, we described that this fund is actually completely unlike our FlexiCap fund. The FlexiCap fund is a very dynamically managed active fund, which has a global exposure, and we will take a lot of active share in stocks that we care about and we want to invest in. Whereas the large cap fund's purpose and the end investor who it's targeting is very, very different. It is somebody who needs to have a broader exposure to at least the top 100 companies that we have in the market. And what the passive funds cannot do is basically maintain a little bit of an active share or tactically execute based on merger arbitrages or even cash to future calls that we can take, then that active fund can do. So it will be very close to the Nifty 100 index that we are choosing, and it gives you the market return with a little bit of execution benefit that we can provide to the investor.
Got that. In the Flexi fund as well, you will have. So that is purely Nifty 100 focus, basically. That's the primary difference.
The large cap 100 is benchmarked to Nifty 100, whereas the Flexi cap has a very wide mandate. It can basically become a large cap, slightly large cap heavy fund, can also have more mid cap, small cap if the valuations change. And of course, it has a little bit of the international flavor as well.
I read that one other headline, which is PPFA's IPO, with a few years down the line, right? Was there a question, or was there an answer to the question, or was that a statement yourself? You guys made yourself?
So we get asked this question every year, and Mr. Neil Parekh, who is from the promoter family, has the same answer that every few years we might reconsider having an IPO. So he just gave a statement that maybe in the next 5 years we might consider, but it's maybe, we don't know.
You all also announced, I think, some global funds, 2 new passive outbound funds where you can track NASDAQ 100 and the S&P 500. Now, what's the view that you're taking on global equities, US markets in particular, after the kind of run-up that we've seen? So if someone invests whenever you launch in this, what is the kind of return they should expect?
So in fact, those funds which you mentioned are part of our Gift City operation, which is handled by a separate team. So I'll just be brief. We have one active PMS over there, and these are new funds we are launching, which will track the broader indices of S&P 500 and NASDAQ 100. I don't have too much more detail to reveal, but they are basically index tracking funds for people who want to invest globally and into an index fund.
Got that. Okay, so in your FlexiCap fund, we always talk to you about your tech holding. You've got an Alphabet and some others. Now, up until now, NVIDIA, OpenAI, these were seen as the undisputed AI winners. And then came Google, Gemini 3, and that seems to be flipping the narrative or the leaderboard. Now, you all own Alphabet. How do you see the AI battle brewing?
It's very hard to predict because things are changing quite dramatically. If you see every 6 months, you have somebody new on the leaderboard at the top. So I would rather look at it from a point of view of cash flows. So if you look at the companies we own, we have Alphabet, we have Amazon, we have Meta Platforms, and we have Microsoft. All 4 of these companies are exposed to various segments of the tech industry, which is one is digital advertising, some is software, some is cloud computing. So all of these generate a lot of cash flows, which are then redeployed in creating the AI infrastructure or even building the models. So out of all of these 4, I think Google is the only one which has the entire stack, right from the hardware for AI infrastructure, then they have the model themselves, and then they have the user base or even the software layer where they can offer it as a service and people can pay for it as a paid subscription. So that is very unique for Google. So Google has been in a portfolio since the inception of the fund. We like that business and it has been growing very well over a period of time. But within the AI stack, I don't want to call leaders just yet, but I think every company has their advantages, and Google, I think, is right now looking like the most advantaged of them all.
NVIDIA is missing from
I was going to ask him. So you didn't, NVIDIA never was there. Was it because it was never making the valuation cut for you? Or was there some other thought to it?
It was always that case. Every time the valuation looked a little expensive, but one has to be a little imaginative, which I was not as a tech analyst in the firm. And the earnings growth was far higher than I anticipated. We missed the stock basically.
Oh, okay, happens to the best, I guess. But anyway, I mean, otherwise you've done phenomenally well. From the few, fund managers who managed to get onto the US tech bandwagon in a very sustained way, well ahead of the time. But just to come back to this large cap offering now that you all are thinking of, and I believe that. I read somewhere that the return expectations should be slightly better than the index. I think the underlying for it is going to be the Nifty 100, if I'm not mistaken.
Yes.
With a cost structure that will be similar to passive, not as cheap as passive, but similar. So what is the thought process here, Raunak? I mean, do you see a lot of value in that space, in the large cap space? Some argue that valuations at 22 times are not exactly cheap for the Indian market. So just walk us through it. Why are you looking at a large cap offering which will be slightly better than a passive fund linked to the same index?
Agreed. So if you see our fund house, we have limited fund offerings, and based on what we think is the most demanded by our investors and what we think can add a little differentiation is when we decide to launch a new scheme. And this is where the large cap scheme came into picture. That's a category we did not have a fund in. And over here, we saw that there's a demand from our investors over many years that why don't you launch an ETF or passive fund? But we realized that the economics for a passive fund and even the kind of way the passive funds operate, where they have to be fully deployed in the way the index is there and the restructuring has to be followed at a regiment. We didn't like that kind of a restricted way of approaching a passive fund. So we thought, can we do a better way? Can we have a fund which basically tracks the index and little bit efficiencies we can provide by doing right execution, by providing merger arbitrage. So for example, in the past, in the FlexiCap fund, we did this. When HDFC bank was merging, we in fact bought HDFC Limited so that we got the arbitrage benefit. A little bit benefit we can win here and there. And I think that will make the differentiation. But broadly, the returns should track the Nifty 100 index. And it's for an investor who does not want to have too much of an active management in their portfolio. Can they have a low cost equity exposure through a slightly passive strategy? This is what we're trying to achieve. So it's a different investor, not the FlexiCap investor. It's an investor who does not generally invest in equity and wants to start exposure through something like this.
All right. Hi, Raunak. Good afternoon. Good to see you. And Raunak, I need to ask you about two stocks, which are out of flavor, at least as of now. We've been talking about exchanges, the unlisted NSE 4-5 lakh crore. You have the BSE at 1.2 lakh crore. MCX as well, is run away. But you have IEX that's around 13,000 crores of market capitalization. You all have been loading for the last few quarters out there. So give us the top rationale out there with regard to IEX. Why do you all like it? And what are your expectations? Because this market coupling had spooked the street, but you'll continue to add on. Tell us more.
So Nigel, if you see IEX position, we only added when the latest news flow cracked the stock price. And what we realized is that although the intention is great in order to have a diversified ecosystem for exchange traded power contracts, but unfortunately, IEX right now has the highest market share, and it is basically the buyers and sellers are both used to come into that platform and discovering price on that platform. So if the market coupling comes in, we would actually like to see how market coupling really affects a market share of an incumbent who has such strong network effects already. Again, it's not proven. So it's basically a probabilistic bet. We will see if over a period of time, IEX is able to retain market share, provided same value that it has been providing to all its buyers and sellers transacting there. And secondly, we look at slightly longer term period, where if you want to scale up renewable power within our ecosystem of power, demand and supply, I think over a period of time, exchange-driven power transactions are going to be a larger volume of the market. And that is the intention of the regulator as well. So that's been the trend over a period of time. And I think longer term, there is a lot of volume for all the players to enjoy. So I did not see too much of a problem when the IEX price cracked and the market coupling was announced. Until there is an execution and actually we see the evidence that market share will erode for IEX, we will see how the stock performs over a period of time. But from the business point of view, so far, not much has changed for IEX.
Okay, all right. We leave it there. Thank you very much for joining us and Raunak and sharing all that with us. Appreciate it. Well, I think you got the market, which is, right there, near highs. Some mid caps are